To Reliance Industries Chief Financial Officer Alok Agarwal analyzing the Q4 earnings of the company.
This financial year was a year of significant achievements for Reliance. The milestones that we achieved during this year have set us on a path of strong and sustained growth in our energy and materials business, as well as setting the foundation for a robust and fast-growing consumer businesses. Let me first talk about our investments. Our energy and materials business investments have now peaked and projects have started commissioning. The ethane import project has been commissioned and ethane cracking has commenced at Dahej. The second and final phase of our paraxylene project has commissioned. We have started commercial production of coal-based methane, and the refinery off-gas cracker project, all the downstream facilities, the gasification units related to our domestic refinery have all achieved mechanical completion and are in various stages of pre-commissioning. The gasification unit related to our second refinery is also in advanced stages of progress and will soon reach pre-commissioning. As far as our retail business is concerned, we saw very strong growth, 60+% growth in terms of revenue, with a final number of 33,765 crores. As far as Jio is concerned, this is truly a startup that has achieved tremendous traction in the last year. We now have over 72 million paid customers, and our tariff plans are gaining traction. In terms of financial milestones, we had record earnings with consolidated net profit of 29,900 crores, up nearly 19% compared to last year. Return on capital employed for Reliance Industries on a standalone basis improved by nearly 150 basis points over last year, and on an adjusted basis, excluding capital work in progress, is now in excess of 25%. These numbers are clearly among the best internationally in our industry. Finally, on net debt, the number is below 1,20,000 crores as of March 31, 2017. With these highlights, let me step back and talk a little bit about the macro which helped us achieve these results. As you all know, we are now seeing a synchronized reflation around the globe. All the three major economies, US, Europe, and Asia, are all growing simultaneously. This we are seeing for the first time in a decade and is a harbinger of good things to come. The second big development was the OPEC non-OPEC cooperation to look at oil production. These cuts are now real, and with that we have now seen oil prices up nearly 10% over a quarter, and gas prices up nearly 20% year on year. The good news is that we are likely to have a third year of strong oil demand growth. We had nearly 2 million barrels per day in 2015, nearly 1.6 million barrels per day oil demand growth in 2016, and the early estimates for 2017 are between 1.3 to 1.6 million barrels of oil demand growth. I must say that it's heartening to see that India has consistently featured in all the 3 years to be among the top three in terms of oil demand growth globally. Looking at our domestic environment, we had a reasonably good year with 7.1% GDP growth in 16-17, which is expected to be followed up with nearly 7.5% in 17-18. And India is likely to be the fastest growing major economy in the world. Talk about our consolidated financials. Turnover at 3,30,000 crores for the full year, 12.5% up year on year. Record PBDIT, EBITDA, 55,529 crores, up 12.4%. I've already talked about net profit at 29,900 crores, up 18.8%. And another record is the highest ever quarterly standalone profit this year at 8,151 crores. Let me talk very briefly about the demand environment in India before looking at each of our businesses. First, this was a year in which we have to look at demand growth on a high base of 15-16. Having said that, the oil demand growth in India was 5.5%, led basically by gasoline and jet fuel. Domestic air travel continues to go very strongly and went up by 23% in 16-17. Petrochemical demand was a bit softer than what we had expected, but still very satisfactory. We saw overall 7% growth in polymer demand, led by PVC at 10%, and we saw overall 3% growth across the polyester chain, led by PET at 6%. Our refining business had the highest ever EBIT at 25,056 crores. GRM this year was $11 per barrel. It is the highest that we have seen in the last 8 years. Our outperformance to Singapore complex at $5.2 per barrel is also an 8-year high. So from an operating performance point of view, really refining has had one of its best years in its history. I would also point out that at $5.2 per barrel outperformance, the average for the last 5 years is only 2.9, so this was truly a standout year. Quick comments on why we had this outperformance. Clearly, our product slate has much less of light distillates, which saw contraction compared to previous year in terms of margins. We really stepped up on efficient crude sourcing and risk management, and we maximized domestic placement of gasoline and diesel. In terms of our product placement, exports were nearly 60%, captive consumption nearly 16 to 17%, and domestic about 22%. For domestic consumption, we now have 1,221 retail stations operating, and it's a matter of pride for us that our retail stations have about twice the efficiency that the industry has in terms of the overall retail selling landscape. Our petrochemical business also had a record EBIT at 12,990 crores. EBIT margin improved to 14%, 160 basis points, and is at a 5-year high. We saw firm polymer deltas led, as I said, by PVC. We saw favorable naphtha cracking economics virtually throughout the year. And we were very delighted to see that the polyester chain finally started recovering, and we saw a good recovery in the second half of the year. We have, as we all know, leadership in every product range, in every product category in this business. And this business is poised to see significant volume growth in 17-18 as the projects that are under pre-commissioning actually go to commissioning and are placed in the market. I'll talk about our retail business now. Clearly a standout performance, 60+% increase in revenue at 33,765 crores. We are expanding footprint, improving margins and efficiency all at the same time. EBIT for the year was 784 crores. We now have a very solid footprint across the country. We have 3,616 stores in 702 cities. We have trading area of 13.5 million square feet, and we serve 3.6 million customers every week. We are leaders in every single category that we participate in. Finally, on Jio, really the things to mention here which are absolutely unique. is that it is the largest data network globally. It carries nearly 85% of all the data traffic in the country as we speak. Over 100 crores GBs per month of data is being consumed on our network. We are in the middle of making the fastest transition from a promotional offer to a paid offer. We had over 72 million paid subscribers as on March 31, 2017, and we established a record of 100 million subscribers in a record period of 170 days from launch. With all this, it promises to be a really exciting year for Jio in 17-18 as our tariff offers gather traction and we acquire customers every single day. Thank you very much and wish you all a great evening ahead.